All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market, here today is what we talked about this morning. It's going to have multiple 20-point pops and drops in it. And so far today, we've had a 20-point drop, a 20-point pop, another 20-point drop, another 20-point pop. We had a more substantial kind of 25-point drop, and now we're in the midst of a 20-point pop. That's what we expected based on the S&P overnight action in the S&P futures, and so we are seeing that. We're seeing bonds continue to rise, but banks not falling much here today. We do have healthcare kind of leading the way sectoral wise, but it is what we kind of talked about, what we kind of expected here in the market today. And I kind of expect we'll see another pop or drop into the close. And I don't think how the market closes will say anything about what happens tomorrow. Meaning, if the market rallies into the close, it doesn't mean we're going to rally tomorrow. If we sell off into the close, doesn't mean we'll sell off tomorrow. But you'll notice all of the price action is stuck in this kind of reaction range that we saw overnight. And I do think a break of this range would be significant if and when that happens, providing it happens in the next 24 to 48 hours. So that's kind of where it's at. Market is up a point right now. And, we see that change pretty quickly here today. The range on the market has been pretty sizable, but definitely not as big as yesterday was. Now, looking at the challenge, looking at the algorithm there are no new triggers on the board. I thought Apple had a shot at triggering bearish, but the consolidation risk element's just too high on it. And so, we don't have a bearish trigger here for it. Chipotle has a downside crossover, but not a bearish signal. We have AT&T with the downside crossover, not a bearish signal associated there as well. So we'll go into the close here with cash. Okay. Now, the biggest question that's come to me, over the last several days is, hey, are we at a bottom? What do you think the bottom? Is this a bottom? Is this a bottom? Or is the market bottoming? And it's a common question, and it's one that any market participant, anytime there's a sell-off, right? Everyone wants to call the bottom, right? It's always this fascinating thing. You call the bottom, it feels so good, right? Most people that call the bottom, or most traders that actually call the bottom, they don't end up riding the majority of the uptrend. But, it feels good to really call that bottom. And so what are the characteristics of a market bottom, right? If we go and look at various market bottoms in the, that are out there, you'll notice there's a common thread to them all. And that is, none of them look the same. They all look slightly different. They all have elements to them that are just, okay, that wasn't in the last one. Or, okay, this wasn't very dramatic, or this was really dramatic. They also have elements that you can see at other times when it wasn't a bottom, and the market went to a new low. Here I have a chart of 2009. Here's 2000. In fact, let's actually take this and go. Here we go. You put a little more perspective on it. Get into August of 2007, and into this bottom here, right? We have this action in November, and market tanked. I mean, the S&P went from 800 down to below 600. This is 25% in 3 weeks. That's just a monster drop, right? And you'll notice how it dropped, right? People say, well, this market's really choppy right now. The market we're dealing with right now is nowhere near as choppy as this market was on a percentage terms, right? And here, look at this monster reversal, right? big bad monster reversal. Okay, bottom must be in. Man, we go to a new low. Here we go. Oh, then it hits a new low, reverses on this day. We see a big uptick the next day. 2 days later, monster down day, right? This is a time period that I traded through, and was a time period where I was mostly reliant on, day trades, and where some of the stuff I decided to hold just, wasn't all that great because, if you're trading for any sort of trend continuation, you get absolutely clobbered. But, we get this period, and I remember this period distinctly because there was a lot of talk about how this was a bottom. Technicians were coming out, this is a bottom. And why would they call this a bottom? Well, for a couple reasons. Because it has many of the attributes of a market bottom. Number one, it has monster volume. Right? Monster volume right here on those 2 days where it hit new lows. Okay? Great. Also has a monster reversal. In 2 days, the market reversed over 10%. Just a monster reversal there. You put that into perspective of what that would be today. That's 2,000 points on the S&P, somewhere around there, right? That's 200 points on the S&P. That's a monster reversal, right? And we saw that here. Okay, great. Those are two big characteristics. Another big characteristic is that we see the reversal break above the highs from, the prior 3 days, right? Where some of the recent selling action, just simply gets blown away. Right here, it had all those characteristics. I mean, it had so many bottoming characteristics to it that, just a lot of the chatter out there, and especially in the market technician circle, were, look, the bottom's in. Market's not going to new lows. And then the new year hit. We saw some early buying, and then we just kind of set into this kind of doldrums where, the market, it had a few rallies, and then it just was going. And what was interesting, here in February, there was not news. This wasn't a news period. This wasn't something where you could wake up in the morning, see the market down real big, and then, the headline is, this is why it's down. The news writers had a little trouble figuring it out. It was a period where fund managers were just getting out. There were a lot of redemptions, fund redemptions, and people wanting to just flee, say, enough of this, I'm done. They gave it to the start of the new year. The new year was off to a terrible start, and everyone, talking about the January effect, right? This daunting January effect because, in January the market was down, so the market's going to go down the rest of the year now, which, is hogwash. But those were some of the big things that were out there, right? We saw the bottoming, then it was kind of reversed, and then we just saw this period of wow. When we see periods of wow, where it doesn't make a lot of sense, where you look and you just go, that is something I really haven't seen a whole lot of. Chances are pretty good a bottom is getting close. Did this bottom have as dramatic of characteristics as this one right back here? No, it simply did not. It simply did not. The volumes weren't nearly as high, right? We didn't have as big of reversals, come into play. I mean, these are some monster moves, but we didn't have as big of reversals, come into play. But there was a catalyst here, right? There was a catalyst. We saw earnings reports start to come out. And those earnings reports, were some of the early March ones, Alcoa specifically, that started to just show a few things that were just a little bit different, Just a little bit different. That, hey, you know what? Maybe some stabilization is starting to happen. But you see that after the initial pop, right, the rally wasn't over. And that's one big characteristic of a bottom. For those that try to pick the bottoms, right, they pick the bottom, great, they get their first pop, and normally they're out. But a big characteristic of a major market bottom is that there is sustained multi-month upward trend after that bottom. So what does that kind of say? Well, you don't necessarily have to try to pick a bottom, right? Picking a bottom, great, fine, whatever. If you nail it, fine. But if you can be able to recognize the bottom and be able to trade higher after that bottom, you're in a very nice position, a very good spot, right? Now, this was 2009, and obviously you can see what it looks like. There are plenty of up and down days, plenty of unknowns, plenty of uncertainty. And as we went forward, there were other major sell-offs, right? Here we go into 2010. And we get a big sell-off here to start January, right? Oh, no, here's the January effect. Market goes down in January. It must be going down the rest of the year. Well, yeah, sure, right? But that's the way investor mentality was. And for good reason, based on historical data. But, just, not working anymore. This is a bottom that I was fortunate enough to be a part of and able to start to buy pretty big right into this area as a fund manager. This week was very pleasant to us. But why did I look at it and say, okay, bottom's in, monster volume, big reversal? Boom, we had two of those elements. We weren't breaking several days price action or anything like that yet, right? It didn't have everything. But this sell-off right here, this one right here, had a bit of a wow factor to it watching it. And it took a lot to get a wow factor in the market, when we were less than a year away from, that financial crisis. And, all right, here we go, right? We get the reversal, and then, there's a sustained upward trend. There is an absolute sustained upward trend, and then we get a drop again. Right? And here we go. This is flash crash. Everyone's always the bottom in is the bottom in. Well, you know what? Most pullbacks, they're not 1 to 2 day events. They're not, 1 to 2 week events. Most of them are 2 to 3 week events, for the most part, right? And you can see flash crash, and then after that weekend, we had China come announce some positive stimulus, big bounce, and then we get the sell-off back down. You see some big monster reversals in here. Right? What's one of the big characteristics of a market bottom? Well, monster reversals. Well, we have them, right? Oh, it doesn't mean the market continued to go on up. We come down to a new low. Take a look at the volumes at this low. They weren't monster volumes. They weren't, monster reversals. We saw bigger reversals and bigger volumes back here in May and June. But yet, market bottom, right? We had another pullback. Anything too dramatic here? No. Not a huge volume, not exactly a major reversal. But we did have a little bit of a breakaway gap. That was a very nice thing to see back when I was trading it, and that was a very kind of clear-cut sign that hey, at least there's some upside to come in the short run. But you got to remember, after trading through this whole period, you don't necessarily trust rallies all that much, right? So you're just dipping your toe in. You start to trust it more as it goes as it goes forward. So we have quite a few sell-offs here, quite a few bottoms, volume factor, monster reversals, breaking several days action, some sort of wow factor. All of those are needed in whether we go to 2011 and look at this sell-off, right? We had monster reversals, we had a wow factor, right? But, it took some time to sort on out. and very rarely after a giant downward move is there going to be real stability following it. And we don't have to go back into long-term charts to see that. I mean, if we come in just to today, right? And so let me just put let's just put fill the chart here, and we can go back and look to last year, right? And here we had the drop, right? And you can see we had what? We had big volume, right? We had this big volume element right here. Okay. Then we go to new lows. We get another big volume element, right? We get a nice little pop. Then we drop again. No real big volume, but man, we start to rally again, and then we get this kind of wow. This just absolute wow meltdown. And the big volume that comes into it. This bottom had the wow factor, had the monster volume. It had the breaking in a couple days here of the highs from the prior days. This had some of the more kind of typical bottoming action associated here with it. This pullback here that we saw, this one right here, that we saw during the course of this challenge, we didn't really have much of a wow factor. We didn't really have any big bottoming volume, right? We didn't see any of that. We don't have a monster major reversal or anything like that. None of that came in on this bottom, right? What's my point here? My point is the fact that they're all different. Yes, there are some commonalities that we can look for, but we also have to realize that those things exist when bottoms don't happen as well. It's one of those where if you start to overlay metrics to kind of look and say, well, which bottoms are going to be less whipsaw-y than others, right? That's kind of how the market vibe is set up, just to kind of take some of those away. And we saw a very nice bullish signal on the market vibe come in right here. At the same time, we saw a bullish signal on the market vibe come in right here and get reversed, right? So, there's not a metric that's going to be foolproof, but if you're not using something like the market vibe, you can take a look at something like the bullish percent index. And one of the things that we saw off of the bottom, here earlier this year and late last year, is that when the market rallied, when the bottom came in, the bullish percent index went up. When we've had the little relief rally in this market, the bullish percent index lately hasn't bothered to go higher. So if you're looking and you're saying, well, where's the bottom? Where's the bottom? Oh man, this has to be oversold. Bottom has to be in. All of that, right? Well, yeah, can you argue over having a wow factor? Yeah, you can, right? To some people, yesterday was a wow. For others, it's like, okay. For me, it wasn't very wow. For me, it was very, very logical, right? We talked about in the morning the reasons, and just something where it was pretty orderly, the way it happened. We didn't see 20-point candles, 30-point candles that we will also oftentimes see. We haven't seen a monster reversal, right? I know, from the lows of overnight futures, we saw this reversal, but come on, we've seen bigger reversals than that here of late. Right, we didn't see this volume factor that was just, oh wow, that's pretty insane, right? And let me pull up here for the SPY so you can see what yesterday's volume was. It was hefty, right? It was solid volume. It was high volume, but we're not in December volumes. We're not in October or November volumes, right? In fact, yesterday the volume wasn't even what the volume was earlier this month. We didn't break into a new low, right? We didn't have some sort of monster reversal. Yesterday, we just didn't have any of the factors that would suggest bottom in, right? We will eventually have it. We will have those things, come into play. And where is that going to happen and how is that going to look? Well, there are a variety of ways that it could look. But when it does happen, when we do see it, it's never 100% certainty. There's always some whipsaw risk. right? Even during this challenge, when we went out and bought, some calls on some things that triggered through this upside right here. Right? Was it a no-brainer at the time? Was it oh man, we have no risk, hey, everything's going to go up, let's just go buy calls? No, of course not, right? And it won't be that way, right? There's always going to be uncertainty. There's always going to be questions. There's always going to be reasons, to possibly get out, right? Normally, tops are where, all the reasons are to be in. There's no reason to get out. But when you're playing off of bottoms, that isn't the case. So my bottom line here, it's all well and good to have volume. It's all well and good to have the wow factor, reversals, and all those things. But if you don't have the bullish percent index, if you're bullish, you don't have the bullish percent index on your side, your chances of success are very limited. Because one of the consistent things that we see over time is that when a bottom is in, the bullish percent index confirms it. And until we have that, until we reverse off of this kind of downward moving bullish percent index that we have seen, to be able to go out and say, hey, market bottom is in, is probably going to be wrong. Your chances of being right are very, very slim. Now, this doesn't apply to day traders and, hey, I want to play the next 25, 50-point swing or something like that, right? Those are going to happen. But, a major bottom that isn't going to be revisited again in a long time, there's no sign of it here just yet. And in fact, all the contrary, right? All the contrary. I do believe that the risk factor in this market is very high. I believe that this is a market where we could see that wow factor come in that we haven't seen here, so far. And if and when that does come in, we will talk about it. At the time, we'll go and trade whatever signals are out there, with the algorithm, here for the challenge. But, I thought it prudent to kind of talk about some of the nature of a market bottom, what we tend to see, what we tend not to see, and how, even when we don't have a bottom, we can see a lot of bottoming characteristics. Thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow. Take care.